Al Rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
This is Al Rolls reporting from the Forex Super Model building regarding the weekly review for Monday the 9th of November 2020 to Friday the 13th of November 2020. Interestingly, Friday the 13th, and I'm about to interview the techno monk who, as you know, has taken a vow of silence. This is Al Rolls reporting from the Forex Super Model building, having had a very insightful interview with the techno monk who was demonstrating the techno stones, which are stones that have been handed down through generations of techno monks and apparently have a very enlightening view on the markets going forward. Regarding the nature of the stones, they all have holes in which represent different things that only highly trained techno monks are able to understand. But one thing can be said is that according to the techno monk, he doesn't like the senior trader. Anyway, moving on from that very insightful, as I said, interview, we're now going to go and speak to the senior trader, and that's where we're off now. Thank you. Welcome to the chilled atmosphere of the Sunday roundup. This effectively is our trading journal where we review our performance, and particularly in my case, my performance as senior trader for the Forex Super Model. Now, this needs to be done in a sort of a relaxed Sunday lunchtime sort of way with a cup of coffee. You know, all the market stress needs to have gone. The markets don't open again till tonight with the Asian session, so we've got a little window of calm. Now this week was quite interesting. We've ended up at about mid 1350 points to the good on our pound trades in the pound complex. These have been swinging around, as I said, during the week, from about plus 1,000 right up to about 1850, 1900, and we're currently punching about 1350. What were the notable things this week as far as I'm concerned? Well, the New Zealand dollar started to be a bit of a pain. If you're long the pound New Zealand dollar, if you look at what was going on, basically they were repricing their idea of negative rates. So they decided that the New Zealand dollar wasn't quite as stuffed as they previously priced in, and that meant that basically the pound New Zealand dollar weakened, so the New Zealand dollar strengthened, and in our case we were taking on water on those trades. But as I say, the models are very robust, and overall we were swinging around, but nothing too scary and difficult to deal with. So people often say that trading the markets can be sort of viewed as as like a three-dimensional game of chess. Well, you know, that analogy to me is quite flawed. I mean, the thing about chess is that you know what the pieces do. You know that certain pieces move in certain ways, and you can even recognise which pieces are on your side. Now in a 3D chess, you know, they're talking about making it more difficult with a vertical scenario. And yeah, it's more difficult. It's a strategic. Can I say it? Yep, strategic game. The markets are really a strategy based game, psychological warfare against your fellow traders who really don't have your best interests at heart. But regarding the chess analogy, well, to me, trading the markets are nothing like playing 3D chess. I mean, you know, in our chess game, in the Forex Super Model, we sort of view it, it'd be knight to kangaroo, or sheep to Tyrannosaurus Rex. You know, the pieces do not stay the same. They change colours, they change numbers, they may even change sides. So as far as we're concerned, the chess analogy is pretty useless. But it goes so far as to say it's a strategic game that you play against other trading minds, and that's where the interest is, I suppose. But here at the Forex Super Model, our approach is quite radical in many respects, and next week you'll get the second instalment of how to trade the Forex Super Model. The first part was is this you, or was that you? Something like that. Anyway, I can't remember the title. But anyway, basically what we were trying to get through there was that most people are taught to trade in a certain way, and if you trade by other people's rules, you'll get other people's results. And so if you play their game, you can expect to get the results that they want you to get. Now, you know, there are people out there who are doing very nicely, thank you, and I congratulate them playing those rules. However, we have developed models which, I say we, the royal we, that give us a very different approach. Basically, Professor Code in the lab analyses Forex flows in terms of drivers, complexes, and as on a daily basis. This information is then passed down to the trading floor, which is me, and I then have to try and reflect these daily flows in the trades. Now, sometimes that is relatively straightforward, and other times it is a pig. However, that's the job. Now, I then, having made these trades, I then pass the baton on to the risk manager, whose job it is to stop, as he would put it, the organisation getting three lemons. Now his job, he's sort of like the goalkeeper, if you like, in football. Goalkeepers get very little attention until they either let a goal in or save it. Now, the biggest attention goalkeepers get in football is when there's a penalty shootout. Now, to me, this seems a little unfair, but all the glamour and the glory is in the, you know, the strikers kicking the ball past the goalkeeper. But really, if you've got a good goalkeeper, you're halfway to having a good result in the game. So if you've got a good risk manager, then you really are in a position to have a good base going forward. Now, just finally, this is this is the situation as far as we're concerned. We're expecting the Brexit talks to be resolved or next week. So the pound has been quite under the cosh really, but we've been prepared to wait. We will wait, and we will just stay solid on our positions, with minor tinkering, and we're expecting some good returns on these pound trades. This is a very large trade for us, probably up near the maximum. It's as I say, it's 38 trades, sucking in quite a lot of margin, and but it's nicely balanced. We haven't really had to touch it for the best part of 5 weeks, arguably because of my skill, and also the organisation has provided me with the tools to do that via the flows, and the risk manager has done his bit when he's not playing the piano. So generally, I'd say we've had a good week, quite a wild week for many people, but we're over it now. We're just going to sort of sit back, and as you probably gathered, we're pretty full on in the markets. We live and breathe the financial markets in the Forex Super Model, and we'd like you to to join our club really. Just by participating, by viewing the videos, and making any comments that you see fit. Very useful, thank you, and let's have a strong week next week. So cheers, I'll drink to that. This is Al Rolls reporting from the Forex Super Model building, having just spoken to the senior trader about kangaroo chess. We're about to finally go and speak to the risk manager, who will decide the fate of the organisation for the last week. Hi there, trading cats, it's the risk manager. This week we've avoided the 3 lemons. Good news. This is Al Rolls reporting for the Forex Super Model, finally down at the lab where Professor Code is going to conduct variance analysis on a day-by-day basis, showing what we suggested in the models and what actually happened. So over to Professor Code and his 2 assistants. Hello again, I'm Professor Code, and we're going to do a bit of variance analysis between what happened in the week of Monday the 9th of November to Friday the 13th of November in the markets, as to what the models predicted on a daily basis. So let's make a start then. Monday the 9th. Monday the 9th of the 11th. This is what we actually got. Yen, euro, dollar, pound. Fill in the figures. Pound plus 333, dollar plus 278, euro plus 16, yen minus 627. So that was the negative unopposed driver. That was the positive rock. The euro was the positive rock. Dollar was the positive mover, and the pound was the positive secondary driver. Right, obviously we didn't know this. Monday morning we headed up our video GBP complex in play. And in a nutshell, what did we say? We said that long GBP trades were of interest, and that we were also expecting yen weakness. So what did we get? Well, these were the actual breakdown of the. So on the euro pound, we had minus 61. The pound dollar, we had plus 2, and the pound yen, we had plus 270, giving us plus 333, which equates to here the pound figures here. So we basically said that funds were going to flow out of the yen into the pound pairs, and that's what happened. So we can give ourselves a tick for Monday, and now let's have a look at Tuesday. Just rub this off. Tuesday then, so Tuesday the 10th. Tuesday the 10th of the 11th, we had this, these were the actual flows: dollar, yen, euro, and then we had on the positive side the pound, and this was plus 279. Euro was minus 74, yen was minus 90, and the dollar was minus 115. So the pound on Tuesday, at the end of Tuesday's trading, was the positive unopposed driver. The euro was the negative rock. Yen was the negative mover, and the dollar was the negative secondary driver. What did we head up that particular video, early Tuesday morning, was JPY to weaken. JPY to weaken. And what did we basically say? Well, we said the yen was likely to weaken, and the flows going out to the yen were likely to go into the pound predominantly, and so we suggested pound yen was of interest. So we were looking at the pound yen, and what did we get for the daily flows was plus 103. So I think we can reasonably give ourselves another big tick for Tuesday on that basis. So moving swiftly on, Wednesday, whatever it was, 9, 10, 11th of the 11th. This is what we got. Pound, euro, yen, dollar, pound, euro, yen, dollar. We had minus 89 on the pound, minus 59 on the euro, plus 50 on the yen, and plus 98 on the dollar. So we had a positive driver in the dollar. It was opposed by the yen. So we had a positive rock, a negative mover in the euro, and a negative secondary driver in the pound. And what did we head up Wednesday morning video with? We headed it up backdoor long, euro GBP. Right, so what did we say there? We thought basically that flows were going to come out of the pound as they front run GDP data that was coming ahead of time, and that the main recipient of those flows was going to be the euro. What did we actually get? Well, during that day, or that trading day, we got euro pound at +4, quite a meagre +4. So it didn't quite happen. However, arguably that was one of the nicer trades, because in the short term, because if you were trying to buy the euro pound, it was selling off quite heavily initially in the morning, if you look at the charts, and it sold off down to the recent significant daily low on the chart, and then bounced. So this sort of ties in with our how to trade the models video. We haven't actually come to part 2 yet, but I don't want to preempt that. But basically, if you traded in the way we're going to show you over the next coming weeks, you could have taken advantage of that fall to a significant support in the daily euro pound, relatively price free in terms of not incurring losses as you fish for the bottom. And because of our flow scenario, we thought we were going to go get backdoor flows into the euro GBP, and as you know, as luck would have it, we bounced off the daily low, and then we ended up for the day +4, which was no great shakes. So we'll give ourselves a sort of a neutral situation for Wednesday. I think that's fair. Right, Thursday. Thursday the 12th of the 11th. What do we have? We had the pound here on the negative side, and we had dollar, euro, yen here. Figures minus 354, dollar plus 48, euro plus 118, yen plus 188. So we had an unopposed negative driver, so it was unopposed in a pound, a positive rock, a positive mover, and a positive secondary driver in the yen. And what did we head that up? We headed up Moody short, GBP, JPY. Right, Moody short, GBP, JPY. And what did we actually get during that trading day, the Thursday? So the pound yen on the short side, we got minus 154 points. So it happened. We got the flows we were expecting. We can give ourselves a pretty reasonable sized tick there for that performance on the Thursday. Right, finally, Friday, last trading day of the week. Friday the 13th, as it happens. 13th is the 11th. Right, this is what we got. Dollar, euro, yen, pound. Fill the figures in. We got plus 129 on the pound, plus 68 on the yen, minus 36 on the euro, and minus 161 on the dollar. So we had an opposed positive driver in the dollar. We had a positive, sorry, that's negative, apologies for that. And we had a negative rock in the euro, and we had a positive mover in the yen and a positive secondary driver in the pound. What did we head up that our video early in the morning on Friday? Where did we headed it up? Equity driven EUR JPY. But what we actually went a little bit further in the content and suggested that the things to look at would be pound yen. Done it again. Pound yen and euro yen. On the short side, because we're expecting yen strength to predominantly end up in the euro and the pound. And what did we get? We got plus 14 on the pound yen, and we got minus 31 on the euro. So the short on the euro yen was mildly successful. The short on the pound yen arguably went slightly the other way. And why was this a struggle? Well, it was a struggle because of the equity markets basically started to ramp up again, and so the yen, instead of getting stronger, had a negative transmission through the equities. Sounds like a good excuse to me. So we'll give ourselves we'll give ourselves a neutral to small negative for that. Although, you know, that's being harsh, but why not? So anyway, that's the variance, and that's how the week panned out. So thank you very much. This is Al Rolls signing off from the Forex Super Model building weekly review.